The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. And being the third hour, that's the 11 o'clock hour, I am following Steve Rhodes. Great program and certainly a great webinar last night. Steve, thank you very much. And you've got John Logan kicks us off at 8 o'clock Eastern Time, just programming. What is today? Today is Thursday, right through until 6 o'clock. You have programming that gives you information. It gives you kind of information that you just won't read about. This is information that's derived from decades, in many cases, for some of us, decades and decades of market experience, and we try to impart that knowledge to you so that it can help you in your choosing and trading and following stocks and getting positions, etc. So back at the ranch, we're going to say that the Dow, based on Visa's outstanding action this morning, MasterCard and Visa just soaring. They are, in fact, helping the Dow. The market really should have been down. I'd say to my subscribers, here's what I do. This is my opening call. This is one of the many charts that I send out every day, and I give a great deal of information. But basically, this is the Dow chart that we follow based on the Chapman Wave methodology. We're in a buy mode. I remember I'd spoken about this. I'd said that the action of that doji candle on Monday, Tuesday, Wednesday, Thursday, on Monday, told me that I'm going to upgrade the buy signal to a buy mode. The implication being, number one, that you will find that there should be at least 4 higher peaks going to a peak D. That's the methodology of the Chapman Wave when you go from a buy signal, to a buy mode. And number two is that if you see that the stochastic and the MACD are acting very well, it gives you confirmation. And then you use that little maroon line, that's the MACD right there, and the slow stochastic. Those little bars to the upside, those are not volume bars. Those are bars that are called histogram. And it's really showing you the distance between the green line, I call it the fast-moving average. It's actually called the 9-period differential, and that's the green line, and the red line is the slower-moving average. So now what we're looking at is the stochastic's up at 92%. That is really good. And there should be higher highs. It doesn't say we're going to go to all-time highs. It says the move to the upside or the downside is not anything that the Chapman Wave methodology in its core of identifying higher highs gives you. It is a forward-looking indicator, and it says that if you go from a buy signal to a buy mode, you can look out, and you will then go to at least a peak D. Sometimes we can go higher. Sometimes it recycles. Sometimes you can get a whole sequence of these things. But most importantly, it gives you the comfort that there should be higher highs and that you're in a buy mode. It means that every decline is an opportunity to buy. But at the same time, what it's also saying is that you can use other methodologies in which to gauge the height. Now, what I like to do is to look at, and you can see I've drawn it in here, the V-shaped pattern. We broke the Chapman Wave falling axe pattern. That's the declining, expanding cone. And very often you can get a one-to-one from the breakout to the upside. I like to sort of keep that aside, keep that as personal knowledge. I don't want to put it out there because it's only a speculation. It happens frequently, but not the number of times, 8 out of 10, that you can say you've got an 80% chance. But when you see these things take place, and it's followed by good credentials, in this case good technicals, then there's a chance that you have a very strong move unfolding, and that you could have a move, and it's going to be really important what happens if and when we get to the 17,350, the high of the 19th of September in the Dow. This is the Dow daily chart. And you can see all the different techniques. Actually, I've taken a whole bunch off. I like clean charts. When a technique is done, I say, okay, we're done with that. But you know what? I try to keep some of them on this because it's a learning experience. Look at that. I typed in here. Chapman Wave wrote, I typed in here, where was it? There. Chapman Wave Roman candle, right there. And that says that at some point you can come back and retest it. Then I typed in Chapman Wave Roman candle right there. And I said, Chapman Wave Roman candle, but at a potential low, because there are two meanings. And what we've got here is that you've got leg B extending. And then what I said to subscribers this morning is that I wanted them to, I kept this to myself because I need to see everything unfold before I actually, before I can put it out as a public statement. And what it was that I was looking at the potential that the white candles that you're looking at here were so powerful. It happened so often. I wonder if I've got them here. Yeah, look, those white candles from a major low, you get very few black candles in major moves to the upside. Well, I showed the parallel between this move from 16,333 on the 7th of August to the move up to 17,074. It actually went to 17,153, I think it was, at peak C before it went sideways. I was showing the parallel with that in the kind of candles. These are even bigger candles than that. And that's saying that the daily chart is really positive and we should be going high. That's that matching or the August takeoff. All right. So let's just go to the numbers. And the numbers are that the Dow is up 129. Why? Look at Visa. I forgot. I think I said somewhere that it was MasterCard, but it was Visa. I thought MasterCard and Visa together were in the financials. It's only Visa. And Visa is up $19.40, 9% at 234. It's a big percentage of the Dow. I wouldn't be surprised if it's accounting for, look, the S&P's up 2, the Dow's up 30 if it was to match the S&P, up 0.10%. So I suspect that what you're looking at here is something like, I wouldn't be surprised if maybe, because it's a weighted average, maybe it's 80 points, maybe more. So that is huge. Quite a couple of questions in the den. We'll get to them. Let me just run the numbers. The Dow is up 133 at 17,108. That has taken out yesterday's high. Another doji candle taken out with a higher high. That says that tomorrow, at worst, we should see a pop-up and then a pullback. So we're watching that very closely. Don't tell me the leg B is going to extend all the way into Friday. That'll be amazing. So now what we're looking at, let me just do this. I want to actually do this because tomorrow is the end of the month, and we'll do a lot more tomorrow in Technical Friday. That's where we're going to greater depth in the Chapman Wave methodology. Look, this is a powerful leg B in the Dow, but the monthly chart is still just in a retracement mode. Now, retracement doesn't mean to say that it's anything but an explanation that is retracing back to that Grand Canyon cliff fall from 17,350 right down to 15,855. And it's only a single leg A down. That can be very powerful to the upside. But I'm going to hold that off. Why? Let me get rid of the 120-minute chart here. Because the monthly chart, if it makes a peak E by not tomorrow going above 17,350, and then next week it makes that next leg up, that's going to be either new leg F, old leg F, or brand new leg B in the monthly chart. I have to tell you something. I've spoken about this as being the mega bull market. What a pity that when we got that Dow, the DIA, at the exact low of 2009, March the 6th, we got it at 66.50, I think it was. I might be wrong. But something like that. That we just didn't hold it and go to sleep and go away. I mean, it could have just bought it and not listened to a single word that was ever said on the news. Just gone to an island and tap danced. I mean, you know, Okay, so the reality is that you've got to be aware of other things, and you can be scared and you can get out of positions. But look at this. This is leg B, but I don't know if this is going to be, because you went in the low that was made at 16,341. We went under it. We went to 15,855. That's a lot of points. Otherwise, I'd talk about this as possibly being a Chapman wave unconventional flat-based restart. If we go to a new high, I can't call this E. It really has to be A in the weekly chart. If that is A, we're looking at the entire month of November into December as being up. So that means we need to put other things together. So let me just run the numbers down here. SPX.X, the S&P, leg B, peak B, if it doesn't make a new recovery high today, above 1991.40. That's going to be tough. I don't know. You can still do it. But here again, same thing in the weekly chart, and the monthly chart is in D. So if next week it makes a new high, but not this week, that'll be leg E. Fascinating what's going on. QQQ series. This is only leg A, and it failed by just a couple of cents to make the new all-time high at 100.57. It went to 100.56 at peak D in the weekly, and this is leg F/B. Now, what's going to happen if we don't make a new high by tomorrow at 4 o'clock, but we make it the following week? It's really unusual to get G's in monthly charts. Yeah, you have to go back and check to see if you missed something or other. And if that's the case, this will be a brand new leg C in a new buy mode in the monthly chart. Ay. I mean, who would have thunk? All right, let's go on. So now we're going to go to gold. Everybody keeps asking me about gold. And, I've spoken about, I don't know how long, it's gotten to the point where I'm a little embarrassed because I sound like a broken record. But let me show you this chart. For those of you new to my work, the idea is to, it's the most simple technique you could ever wish to find in its concept. You find the lowest low bar, and you merely count each successively higher peak. You should get to peak D, the fourth highest peak. That's where you've got to be careful. Other things can happen. So while I'm doing that, let me show you something else. I think it's chapter 17. Look at all these chapters. It goes into great depth into how you find the buy signal, how you find the buy mode, why we only have long position. Actually, it's at this point only one very, very strong long position in the market. We keep trying to buy, keep missing those buys, but we're not short. I will not short right now. I need to see this fulfill. And look at this. This is called the H pattern. And this H pattern, I'm going to show you right now, looks like that. And you keep coming down, make scallops or lowercase H pattern, break it, go to a lower, and then you can go to a lowercase m. It just continues. Well, look at this, dare I say. And go to a break. Basil Chapman, Tiger Tips out. We'll go right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. The Dow is up 120. S&P's up $1.15. This is the bias is because of Visa, maybe a couple of stocks as well. But I would not be surprised if we actually do goes down a little bit. We do need a bit of a rest. It would be normal to expect that in the S&P at least and the Qs. So going back to the story here, I can't even remember what the story was. Where was I? I'd have to find it. Oh, the GLD. So the pattern that I've been talking about is that pattern that goes to a lowercase m formation. Drew this in over a year ago. That's what I was anticipating. Everybody got very bullish on gold. Everybody got very bearish on gold. Not everybody. I'm saying people I listen to, certainly on CNBC, and there's one guy that has been talking about gold and silver going to the moon for I don't know how long. But all I can say is the patterns repeat over and over. This is part of human nature. And gold, talking about gold, I forgot to mention the other day, I held the Oscar. What do you call that thing? What do you call that gold statue? This gold statue. Remember, I have a good friend. He was our best man at our wedding, and his son was one of the directors of the King's Speech. Won an Oscar. I held it in my hand. Statue. No, yeah, I know it's a statue, but what is this? The Oscar statue. Okay. When I tell you it's heavy. They said it's pure gold. I don't know if it could be pure gold, but boy, was it heavy. Anyway, it looks very nice, and it's not that big, but it's very heavy. It's like the size of a weight, one of those weights that you use, pump iron, kind of one of those things, hand weight. Anyway, so gold, the GLD, is at 115.07, down $1.34. And I'm looking at it, and this pattern has just been... It's a pattern that I've talked about for a long time. The big thing is that as it comes into the low, in this case, the low's in the 114 area, if the GLD breaks and closes decisively under it, the weekly chart and the monthly chart, you've only got 1 month from that low to get back right in above 140, I'd say to 116. Because if you start to break into the 112, 110 area, then what I've been talking about for a long time, expecting those sell gold, buy gold little stores that opened up a couple of years ago, you'll see the for sale or for rent sign going up, because I don't know how they're going to do it, because that'll be a very big negative. And that to me would be a clue they'd be getting close to a low. But also the dollar, I had a question. I'll do it right now, then we've got to go to our first caller. I'm expecting that the dollar, now I might be wrong about this because I'm relying on the dollar index. That dollar index says that there should be a leg D in the Chapman wave to retest the 86.42 high in the monthly chart, where that 200-period exponential moving average is, but that will make D, if we can go 1 penny above 86.75, that'll make leg D, and we'll be watching the MACD and the stochastic, because at that point, we could very well start to see gold have a pretty decent bounce. Whether it's more than a bounce, I just don't know yet. But I've been saying this for a long time, that you just got to watch it. At any point, there's always one sector that has just had its day in the sun, and it's going to get cloudy and rainy for a long period. So that's what I'm looking at. So let's see. It is gold-plated, made of steel alloy. Oh, okay. Thank you, Steve. Steve, talking about that statue, the Oscar. All right. So we're going to go to Ben in Tallahassee. Ben, I didn't forget you. How are you?
Basil, great. Welcome back.
Thank you very much.
Great to hear your voice again. Well, what you mentioned earlier really resonates with me. Since I've been a trader and listening to all that stuff, the 401k plan has really just sat in the closet the last 5 years, and it really because I'm just trying to time it, and it's just not working. So the $1 million question is now another good time to re-enter some new money into a 401k. Now, the thing about that is I can only exit on a quarterly basis.
Oh, so we've just
or I get dinged. So the big question is, the outlook over the next 3 months.
Wow.
Yeah.
I spoke about this the other day. I can't remember which day it was. I'm not sure if I completed my thought. Sometimes I don't always complete the thought because I've already moved on to another thought, and I can see that there's a break coming up. But I'm going to deal with that, if you don't mind. Can you hold on?
Yeah. I mean, really, ultimately, the question is, your projection the next 3 months.
And that's the difficult thing, and I'm going to explain why. And I'll be right back. I'm not going to avoid the question, but I'm going to deal with it as coherently as I can. I'll be right back. Now's up 122, $43. We'll be back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So now what I have to do is I have to do a couple of things. We've got Ben on the line from Tallahassee. We're looking at, and this has been one, I'm willing to bet. I can say that because there's no way of actually proving it, so I'm just going to say it. I'm willing to bet that there have been more people that have lost more money than they had ever made over the last 5 years by shorting this market. So with that in mind, my contention, and now I have to bring politics into it. It's not politics party. I'm talking about politics as, because I have to talk about the president. I don't believe that there's going to be a major downturn in the market, at least until next year. And then, and I did mention this the other day briefly, when Clinton had a final year in office, final year and a month, the market had already started its major decline. Nobody spoke about that. It was called the Bush failure. And that's what happens in presidential. Same as with when you get, remember they talk about Hooverville? Hoover was stuck with the baby at the end after the top in 29. So I don't think that this market is going to make its major decline until later on. That's number one. Number two is there is a bias that is going with this particular president You can understand why it's there. It's there. I mean, you can't deny that it's there. It's a favorable bias in the media. And as a result, there is the kind of talk that you would get about bad job numbers and all that. It's just hardly ever there. And the public needs to hear something over and over and over and over, and then like parrots, you'll hear people in the streets saying, oh, yeah, bad economy, or whatever it is. And I mean that in this most sincerest form. I don't talk about people as if they're dodos, but in fact, we are dodos. Ask me about electricity. Ask me about something I don't know about. I can just repeat what I heard. There's nothing that I am... it's empirical data that I'd have. There's nothing that I can quote you that is even statistically factual. I'm just parroting what I'd heard. Same with sports. Ask me about the Red Sox or Patriots. I don't watch them. I play sport. I don't watch it. And that's the same thing here. So you are still hearing the politicians talk about the bad economy when, in fact, the stock market is at record highs. And it's just that we are ignorant in the fields that we're not experts in. And therefore, my thinking is that we are still going to get that squeeze that we always get at major, major tops. And if I think there's going to be a top, it's going to be a major, major top when it finally comes. And that will get those people I play tennis with, those middle-aged, maybe older people, because the younger people don't talk much about the market, and the middle-aged guys have stopped for the last 3 years. I've hardly mentioned the market to me, except the people that are always in the market, and there are fewer and fewer of them. So I'm suspecting that we will get a trap, a real bull trap, of this market screaming to the upside at some point. Now, in the interim, is it possible to get a 22% correction? Yeah, it is. So now I'm coming back to how do I answer you? And the way I can answer you is this. If I'm looking at the IBB, and I must say that we've been long since the middle of October, and it's acting extremely well. It's now in leg B. We tried to add yesterday, didn't quite work out, took a 1 point loss or something, 1%. But we've been in since in the 200% long of the IBB. This is screaming to the upside. It hasn't yet become parabolic, but if I look at certain stocks, they are parabolic. And let me find some. Celgene, I think it's Celgene. Yeah, they're going parabolic. Or Gilead, Gild, they're not yet parabolic. And I think in November sometime we could see a pretty major top. And as we rotate, even now we're going through a rotational correction. But there are certain sectors that are acting very well. I mentioned to my subscribers to my opening call this morning, sector that we tried to get into this morning. We just didn't get it. This darn Visa spoiled it for us. I know we would have got what we wanted. So now it's getting harder and harder. So here's my answer to you. Ben, I'm going to make a suggestion. If you go in, are you going to be looking just at something like the SPDR or the diamonds? Or are you going to use an ETF, or are you going to go into specific areas?
No, there's I think it's an S&P fund, yeah.
Okay. So
yep, just a general fund, not an ETF.
Now, my big problem is I think that we could see a pretty decent rally. My thinking is that next week comes the real test. It could be next week or the week after, but sometime in the first part of November, we're going to get a real test of this strength, whether it's going to go all the way through to the end of the year. But if you can't get out, then all I'm going to say to you is I'm going to make a recommendation that you must think about. I don't want you to jump into it. I want you to think about it in terms of your overall portfolio, because you know as well as I do, and as well as I've stated many times here, that a buy and hold aspect, which everybody thought was dead and gone, has been the only way to be in this particular market, especially if you were correct. And I'm going to just...
Of course, nobody could get their QE crystal ball out, I guess, right?
Exactly right. But
if it wasn't for QE, the buy and hold would probably have been the death strategy,
if there's going to be a penalty to be paid for all of this, But I'm just thinking about going into next year. So think about it. I don't want you to jump into it. Just take the whole weekend. There's no rush. 100 points here or there is going to make no difference. 200 points will make no difference. I'm going to suggest you start a small position in the S&P, knowing that you are stuck for 3 months, and that small position could lose 15% or 18%. And on the upside, I'm not sure yet whether it's going to be the trigger for the major move to the upside without a correction. Boy, we need a correction to get that move to the upside. But if it's
Basil, I'm sorry, but just by you saying that you still see a big surge up before the what you refer to as the major top, that in itself helps a lot. Because I think what I'll do then is I'll just put a little bit in. I'll divide what my intentions are over the next 3 months, and I'll just ante it up on a monthly basis. And then what are your thoughts on that strategy?
Right, that's my thinking. Now, of course, you're relying on a smaller portion, which means if it goes up, it won't be such a big deal to go up. And if it goes down, it's not nice, but it's not the end of the world. But at the same time, I want, for instance, the XLF. The XLF is starting to act really well. And it's just walking the 9-period moving average in the monthly chart. It looks like it might make a V-shaped pattern in the weekly. But if it goes to 23.70 to 23.90 and then starts to fail, that's that Groucho Marx eyebrows pattern, that V-shaped pattern. It could pull back again to the 23 or 22.80 level. I don't know if it'll go all the way back to the most recent low, but you've got to be prepared that there could be nice gains, and then all of a sudden those gains could turn into losses because you're kind of stuck. But that wouldn't be
but that's not your major, so.
Right.
There would be another opportunity to add a little bit more.
I don't think I'm getting a major sell yet. You've got other opinions, and other opinions are very important to listen to, but everything about my chart is saying, not yet, buddy, not yet. And I'm just going to say to you, I would put a little in, and I'd say, you know what? I know my risk. I'm not sacrificing everything. I want to be there. I want to be in this trend that has the potential to accelerate to the upside, even if it's a climactic move. I don't know if it will be, but that's why I'm looking. So I hope that helps.
Well, I think the other thing you did is you just nailed it. You know, there's other opinions. Well, I think all those other opinions got me in trouble the last 5 years. If there's one thing I realized, and I learned a lot, is there's a lot to be said about sticking with one person's strategy. You start veering off to all these other strategies. I'll tell you what, your brain spins around 1,000,000 miles an hour, and you're like, you don't know what the hell to do. So you stay out of the market for 5 years for the long-term strategy.
You know, I agree, but I'm also going to say something else to you. Your gut feeling, I bet there were times when you said you'd like to buy, and then you were kind of put off by whatever it is. So I go also with your gut feeling. You've been around long enough. You've seen markets. Yeah. If you feel nervous about putting it in, don't put it in. But if you feel like I really want to do something, everything else is stopping me. But my intuition is telling me that I'd like to be there for another move up. Then,
well, I'll tell you, the day trader mentality is pretty easy, right? You can get in and out in a New York second.
You're done, right? And then you're done.
So what happens is it makes you almost too smart for the long-term strategy.
Right, especially when you add up. Right, especially when you start adding up and you say, I could have done even better if I just didn't go in and out. But we
I wish you and I could have been in an island together 5 years ago sipping margaritas, right? All right.
Oh, Basil, you would have had to put up with me and my singing. Thank you so much, Ben. I hope that helps you a little bit, okay?
Yeah, thanks a lot. Have a great day.
Thank you. So let's do this, folks. I'm showing you the XLF. Look, even here, where it was a perfect time for it to make a peak a single move from 21.55 to 23. What's the high today? 23.50. We haven't even got that down move. I have to tell you, if ever there was an excuse for the market to have been down 130 to 150 points, today was it. So all I'm saying is that the trend, the tide, I talk about the piece of driftwood. When you throw it out, if the tide is coming in, that driftwood will never go out. It'll always come back to shore. If the tide is going out, it'll never come to shore because it'll keep going out further out. So all I'm saying is my bias at this particular point, and I could change that at some stage, has been to be buying. And I have to stay with that way. We have no short positions. I feel comfortable having no short positions. Maybe I won't feel so comfortable, in a week, but that's the way it is. So now let's go on, and I wanted to do a couple of things. Answer a question. We've got some great people, listeners and subscribers and folks that give information with our Tiger family. I'm just trying to find it right now. Well, actually, let me go to this question first from Adam. Adam says, dollar, can you look at the chart of the U.S. dollar and maybe U.S. dollar JPY2, which often is correlated with the S&P? All right, I'm going to do that. Remember, Larry comes up after me. Larry looks at these currencies and the commodities in much greater detail. So please stay tuned for Larry. I'm going to give you my little take on this right now. The dollar looks like this. You see the candle that's forming that looked so ugly a little while ago? It looked like it had failed. It had that long wick to the upside. It's like an evening star or a dragonfly or something like that, with a long tail on the upside, shadow they can call it for candlestick patterns, and then the body of the candle at the bottom. Well, very often it looks ugly, but the top likes to be tested. I've got this as leg C. I've got a U-shaped formation. I don't want to go to my charts now for my CD, but this U-shaped pattern says there could be a test of the 86.75 level to make leg D, but at the same time, 1 penny above makes leg D in the weekly. So I'm still positively biased towards the dollar. I'll make other decisions maybe when it starts to test the 200-period moving average again. And if you look at the ERUSD, which is the euro, was that the question? No, it wasn't the question. The US dollar, JPY. If you look at the USD JPY, I've got this in leg C. It's traveling just like, yep, correct. It often moves and correlates with the S&P, but it's doing something like that right now. It has gone, and this is really important in my work, it has gone and closed 1 month above the 200-period exponential moving average. It has made a peak D in the weekly chart. It's in leg D in the monthly. Now, this pattern looks like a frying pan. I got all these nicknames for these things. But this particular pattern right here, the way it's made the handle, the way it's challenging the 200-period moving average, the way intra-month it went underneath the 200-period, this Goldie line right here. If you're looking at Tiger TV, you're now looking at the monthly chart right there. Look at the MACD making that M-shaped formation. Relative strength is starting to fail a little bit. The stochastic bouncing back into the 85% area. That's good. I like what I'm looking at, and I'm looking at these little scallops to the upside, these little cup formations with the rising highs and rising lows. And I'm saying, hey, so far, with a day to go, day and a half to go, the USD JPY monthly chart looks very good. So as it's in leg C, in the daily with the stochastic at 87% and the MACD still good, I'm suspecting I'm going to put the up arrow in. This is trough C. Oh, and when you're coming to the downside, I don't often mention this, but when you're coming to the downside, if you only go to 1 or 2 troughs and then you go to the upside or 3 and you don't go to the D, that's a sign of strength. That's like a failure on the upside. What was it that was failing at a peak C? Yeah, the GLD, I think. I'll show you in a minute. All right, we've got another segment coming up. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's now up 142. S&P, whoa, up 430. Nice action. Okay.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi, folks. Isn't that interesting? As we're talking about this, I just got an email. Well, it's part of the stuff that's sent out. I usually just get rid of it, but I thought I'd have a look at it. Why? Because it had a very interesting opening comment, and the comment was, October trends. It says, what a difference a year makes. After peaking at 1,145 last November, a Bitcoin now sells, as we go to press, that's probably yesterday or the day before, at about 350. Oh, isn't that interesting? After gold peaked at 1921.50 a troy ounce in September 2011, it's trading in the low to mid 1,200 range. Actually, it's under that. As for the dollar, after falling to 1.45 against the euro when gold was hitting new highs, the euro-US dollar FX spot rate fix is now at about 126. And then he talks about oil price drop, the good, the bad, and the ugly. I will actually read that. Usually I just get rid of this stuff. So isn't that interesting? Okay, so let's do this. I'm looking at the SMHs, and that's the semiconductor index. Made a peak C so far in the daily. A nice retracement to the upside. The weekly doesn't look like it's going to make it. It doesn't look like it has the power to make a V-shaped pattern. That's what it looks like right now. And the monthly has, this is very interesting. Let me open this up so you can see this is the Market Vectors Semiconductor ETF. It made a peak F/B. If tomorrow it doesn't go above, in the monthly, 52.68, and the SMHs are trading at 49.14 right now, down $1.12. Now let me squash this, because it made a perfect left side, right side price time match to the level that I had chosen as an important level. That was at 51.30 high back in May of 2001. But in 2000, it went to 100.20. Now, when do ETFs come out? Usually, that trend has changed a little bit. But this came out where? 2 months before the all-time high. Isn't that the way nature works in the market? It comes out May of 2000. The S&P had already made its high in March, and the QQQs made their high. And then look what happens. In June, it opens at 80. It opens at 78. It goes down to 67. Has a high of 84. Closes at 82. Next month it goes where? To 100.20, and that's it. It comes down a little. It did drop. It dropped from 100 down to, I'd say it dropped a little. Yep, down to 15.16. Tried to rally to 42.53. Failed, made that H that goes to an M pattern. Goes down to 12.95. And now is making a beautiful bowl formation. Beautiful, I should just say it's making a potentially beautiful bowl formation. Why? Because if at any point the SMHs start to trade in the 52.5 to 53.5 area, they've broken into fresh ground, and the next high would be 57.99, the high of January of 2001. And this is like an H pattern that eventually makes a cup formation. It's taken a little bit long on the right side, but I don't want to dismiss it because the MACD is still good. Stochastic is dipping, but it's still at 91%. So I'm watching these things. You can tell I'm watching very closely. Now, we're about to finish up for the day, being Thursday. Got programming right through the day. Stay tuned for Larry. I'm sure it's going to be another great show. Now, let me just do this. The VIX index. And, of course, I made a big deal about this VIX index, and I've made a big deal about the VIX index for a very long time. Had an island reversal from the peak F, 31.06 daily high. That was on the 15th. That was the very day the low was made in the market. And lo and behold, that weekly chart tomorrow is going to look like all those weekly charts that break out to levels and then fail. And I have to expect that the VIX down in the low teens to low in the teens into the 13s and 12s, that'll be sustaining on the upside. If it breaks above 17, that's bad. I'll be back tomorrow. Have a great day. See you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.